Hi, this is Mac with PriceActionTradingSystem.com, and today is Wednesday, January the 25th, and we'll do our chart lesson real briefly. Um, just wanted to start out by showing you support and resistance. This was really the support area from yesterday, so if you had that on there, you probably shouldn't have gotten surprised when prices bounced in that area. Right after the open this morning. That area has been holding all across there for quite some time, around the 1300 area. And 1300 is actually one of those psychological areas, the round number, round 100. So always keep that in mind. Remember that. Doesn't mean that prices will definitely bounce or turn at those places, but generally it takes them a while to work through those areas on the way up or on the way down, and then once they get through there, they generally will test those areas just like we did here. We've tested this 1300 area several times to make sure it was going to hold, and then lo and behold, once it held enough times, then look what happens to the market. We get a day like this. We haven't had a nice rally day with volume like this in quite some time, so it was a pretty nice trading day. And if you got your lines on here, um, it was pretty obvious where the turns were going to happen. We're not so worried about the turns up here because if you're taking these, you're counter trend trading, and a lot of these aren't going to work out, and they're just not the way to be trading. The ones you want to be looking for are the ones on this low side. And I always teach everybody to start with your first two real swings and draw your trend line off that, and here that is, and let's just make it a little bigger so it's easier to see. And if you drew your trend line off these first two swings here of the morning, then you pretty much had it all the way up. This was a little bit confusing right in here because generally you won't get a break like this without getting a retest of the high. Generally, if you got a break like that and then two legs up to a new high, generally the trend is going to be over. But that didn't happen today, and we once it held again here, that you knew the trend was still in play, so just stay with it. And you can see we did get hesitation right here at the previous highs from the overnight over here, and so you should have had your lines right there. And these are generally pretty easy scalps. Just I like to sail them naked, and if you'd have done that, you would have been in at. Let's just see if this one worked. I was done trading by the time prices got up here. So your entry would have been 1350, and this went to 14. You got just enough to scalp out with your four ticks there, and so it did work like usual. So keep an eye on those and remember those, and you actually might have had your line right there. That's where I actually had mine because I usually use the last couple of closes. But you had more touches on these last two closes here, so this was a better spot, and you do see that was exactly where it turned. But if you had it right there, you were just a tick off. It wouldn't have made a whole lot of difference. Um, but on a trend moving that good, it may be risky trying to sell this blindly anyway, and so I don't know if I would have done that today, even if I'd have been trading. But I like to make mention of it. But originally, you probably would have drawn this line and cloned it, and then had this line right up through there. And you can see that was the trend channel until it looks like probably just after lunchtime it finally broke above, and you can see it broke above, it came back and tested it, and it held right there, and then the trend continued on. And really, generally what you do, you can usually get a perfect measured move off of these. So if you did that, let me just copy it again and show you what I'm talking about there. Copy that again, and you move it up to right there. Actually, it'll be all right in there, off those highs right across there. And you see those are about an equal move, and that's generally what will happen. Is the same thing on your trading range. The next range, if it goes in another range, will generally be the same height as the previous one. And so you can see this move here was pretty close. If you put it all the way to the top, it was a little bit bigger. And if you put it right there, it's slightly smaller, but I believe that's where it is. You can see it catches most of the touches right there and turns it down, and that's probably, that doesn't look right. Is that, yeah, I guess it is right. When you put it right there, it looks narrow down here than it does up here, but I guess that's just a optical illusion of some kind. But anyway, that helps you figure out where the turns may happen. But on a trend like this, on a good trend day, you don't want to be counter trend trading. You want to be looking to take the longs. And you hear me talk about it all the time. I'm always saying, wait for the key entry points. And today, you wouldn't have even needed this, really. I always like to show that just for teaching and learning purposes. But all your trades would have been buys along this trend line, and you probably wouldn't have gotten this one right here, but you would have known to buy here. This one was not so obvious, but usually you do get two legs up, so this was another good entry right in here. And then you could have entered anywhere in here, entered again here, and it would have been okay to enter right here because that's a second entry long and a retest. After testing this, it's a retest of this. What was resistance is now acting as support, and that's usually a good sign. So going long right in here was okay. And this really is just a two-legged pullback to the EMA here. So it was a little late in the day to be entering by that time. But here were your really good entries. And this was actually one here because of this support area down here. You would have known to be looking to buy down here. And you can see it went lower once, immediately bounced, went lower a second time, immediately it bounced, and then it made a higher high and pulled back. And this is really a two-legged move right here. This is just a two-legged move back. So buying right here would have been okay as well if you saw that. It's a little bit more difficult to see because you were thinking downtrend. But here's the clue. You had your downtrend line. That's pretty obvious. That's your downtrend line. You broke it. You actually had a two legs, one leg, pull back, second leg, and then you went down and made a new low. So here was your low, and then the market reversed, and it reversed right at a previous support area that's been holding quite a bit for quite a few days. And that was your signal to, especially right here. If you didn't catch this, you definitely should have caught it right here. This is a breakout pullback long with two legs back to basically to the EMA. It did shoot through the EMA a little bit, but then it turned and went higher. And then you had your correction right here, went higher. And if you missed it, you really shouldn't have missed this double bottom. And particularly since you had your trend line drawn here, you knew even if this trend line was changing, you're still going to get a retest of the high. So this was a nice entry right here. This was definitely a good entry. And then you had a second chance. The only thing I don't like about this one was this long bar. However, prices actually broke lower here first and then turned up and broke above this bar. And whenever that happens, whenever prices break below here on a very bearish area, that's a very bearish bar right there, and then reversed, you can have a buy stop sitting there waiting above this bar because that's generally a trap. And when it hits, everybody's going to have their stops here that went short, and that's what drives this up real fast and hard like that. When they hit those stops, suddenly everybody starts exiting, and all these longs that got out right here have to get back in, and it just really fuels the fire and it takes off. And that's what causes those, after such a bearish move right there, you know, if you get caught there, then you suddenly say, well, that was so bearish. What happened to make this so bullish? Well, what happened, let me get that out of the way, is that all these people got short right here, and a lot of longs probably exited right here as well, thinking that the trend was over to the upside and the trend was going to start back to the downside. And when they realize they get trapped right here, when it broke lower and it instantly reversed and then breaks out this high side, that takes a lot of momentum to do that. And that's a good sign that the market's fairly strong. And so when it breaks up here, it starts, most everybody that got short had their stops here. And then also once it comes up here and starts moving higher, the longs realize they were tricked out early, and they all come buying back, and so all that buying pressure suddenly shoots the market up to a new high. And that's exactly why that looks so bullish right there, because that's what happened. That's really the same thing that happened right here. You had this little trap. Prices went lower right here, reversed, and went back up. And when they broke above there, you see how they shot up. But that was still a fairly strong resistance area right across there. And if you brought your line down here where it should have been down here at the time, it makes it a little bit easier to see. Actually, you probably would have had it right there, or maybe even right there, but somewhere right in that area across these previous highs. And that would have alerted you to think about it, prices maybe pulling back from there, and that would have been a nice place to exit off of either one of these trades and then wait for the next setup. And that's generally the way I trade. I would have exited up here, or I did exit up here actually, because I actually took these two trades right here and I exited right here, and then I look to re-enter later. I don't like to give all this money back. So if you entered right here and you watch that go all the way up to there, you watch yourself make 2 or 3 points, and then you watch it come all the way back and then scare you out with a tick or two, only to watch it reverse again and go right back. So rather than take the chance that this is the end of the trend, and I mean this thing actually could have gone lower from here. So what I do is take my money at the place I expect the resistance to occur, which is where the previous highs were, right across here. So exit right here with your profit off either one of these trades. Anything that you entered long above here, this is the place to exit, and then look to re-enter when it pulls back. And that way you don't give your money back, and that way you don't, because that's quite a bit of profit from here, from this entry to here, and even from this entry to here. And if you give all that back because this turns and doesn't come back, then you really just overstayed your welcome. And that's the reason I like to exit and re-enter. I'm not saying that's the way you have to do it, because you could have held on and actually added back on here and kept adding on every time, and by the time you got up here, you would have made a bundle. But I don't like to do it that way, because too many times it doesn't continue on, it reverses and it comes back and it takes all your profits away. But you could have entered again anywhere right in here. You had this double bottom again right here at this resistance area, and now it's acting as support. When it tests that support twice and it holds, it tested it there and there. Remember our rule: anytime the market tries something twice and fails, it's likely to go further in the other direction, and there it went. Look at that nice rally, and that's why prices rallied on up through there. And if you didn't like this because it looked like a lot of overlapping bars, you could have waited for right here. And but I really like this entry right here better than I like this entry, because because it tested this trend line 3 different times and never closed below it, that's a pretty good sign that prices are probably going to try to continue on. So that was another clue. And you got the same thing right here. We tested it again right here, and it held to the tick. And but the best thing to do is wait on this second entry right here, and you can see that prices did take off there. They went on higher here, but they really were hesitant. You would have had to enter above a doji just about every time right there. So by waiting and being patient, you got a better entry right here, and that one shot on up. And I believe your runners would have even survived that one if you entered right there, 13.1675. Your runners would have even survived that, and you could have ridden this all the way to the top and got out right before 3 o'clock today, or actually, right about 10 to 3, and been in pretty good shape. So hopefully this all makes sense to you. But the idea is to enter at the key entry places. And I know you hear me say key entry a lot, and for those of you that have been around, you know exactly what I'm talking about. But for the new people, let me just explain real quick, and then we're going to call it a day. The key entry points, when the market is trending, the key entry points are pullbacks to the 21 bar EMA, which is this line all the way up through here, and really pullbacks to the trend line. So that's why these are all great entries, because they're key entry points. And you can see that was just a 2-legged pullback to the EMA. I mean, we haven't had a lot of these lately where the trend goes and it never even gets back to the trend line. It just keeps pulling back to the 21 bar EMA and going higher, because we haven't had any real good trending lately. It's been, I mean, this is a good trend, particularly for what we've been looking at over the last couple of months. But I mean, I've seen days where this trend would be even steeper, and it just goes and goes and goes and goes. And we've been waiting on those kind of days, and they'll return. That's the way it is. The longer it stays in a range, the better it's going to trend when it does break out. But again, the key entry points are the pullbacks to the EMA and the trend line. which are all these entries up through here. And you can see pretty much every pullback to the trend line is really just a pullback to the EMA. We were just getting through it a little further than we normally do till we got right here. And then the other thing is the other key entry places are support and resistance, and that's going to be down here where it's been really for the last couple of few days, and then up here where we've been getting resistance across here, right across this area for the last couple of days. Yeah, we broke above it right here. Remember we talked about that yesterday, but that's in the overnight, and you see it didn't take very long before the overnight was over. It came all the way back and got back inside this trading range again, just like it almost always does. And it held again right here before it went higher. And that's just how the market works. It's always seeking out support and resistance, and that support and resistance either holds and it goes back in the other direction and tests, or it fails and the market reverses, so, or the market continues on. Okay, well, that's going to wrap this up. This is Mac with PriceActionTradingSystem.com, and hopefully you saw the trend today and had some good trades and made some money today. But if you didn't, I mean, that's the thing about it. You get in a trend day, and it trends for a few days, and you kind of forget about the range, the range trading and the range rules. But lately it's been the other way around. We've had so many ranges, then people get to concentrating on trying to trade the range. I don't know why that was so hard to get out there. I apologize, but then you get used to trading the range, and then the trend throws you off guard. So you got to look at every day and look at the patterns and the price action and what it's telling you, and go from there. But really, as you can see, all the way up through here, we were making higher highs. Here are the higher highs all the way up, and higher lows all the way up, and that's a uptrend. And so learn to spot those and learn to draw your trend lines. We generally get them off the first two swings, and it's generally about a 45-degree angle gives you your best trends. And you can see that's a nice 45-degree angle there. This one's a little steep, and that's why it didn't last very long. That's probably more of the 45-degree angle right there, and you see there's just not much of a trend right there. This was really steep. But all it was we were making up for this false breakout in the overnight and getting back in this range. So it just as fast as it went up there, it came back that fast once it started coming down, and it got right back in this range where it stayed until, looks like it broke out about 11:30 today just before lunch. So learn to spot this stuff. Any questions, drop me an email. But I'm going to call it a day. This is Mac with PriceActionTradingSystem.com, and we will see you next time.